All right, so what we're going to do is actually go over Euro USD. So I like to start from my higher time frames. So in this video, I'm actually going to go over the monthly time frame, and then we will drop down to our lower time frames. Now, the first thing I like to look at is where the price is currently located. Also, I like to then verify key levels. So for the type of trader that I am, not too much of a swing trader, but due to the fact that we're on a higher time frame, I will still mark the key levels on this time frame, and then I could drop down to those other time frames. So for example here, well, actually not for example, because this actually happened. Let's see here. I don't really like to force the price, but that's not really forcing it because this is still rejection here, price rejection here as well. And then we also have price rejection at this low point here. Okay. Now, looking within this range, we also have key levels here as well. Okay. And these are just based off what I'm seeing from where price has been rejected. No, I'll leave that there. So that's a good amount. That's fine. And then once we drop onto smaller time frames, will be great. Now in this video, what I've noticed is that when I back tested, I skip the weekly time frame, and then I go straight down to the daily time frame. That's just my preference. However, if you feel comfortable with going from monthly, weekly, daily, 4 hour, 1 hour, 30 minutes, 15 minutes, that's fine. Sometimes I do go to the weekly. Most of the times I don't. So in this video, I won't go over the weekly time frame. However, I will definitely go over the daily 4 hour and then the 1 hour. So first thing I see here, currently, I see that right now the market on this right-hand side, okay, this right-hand side, right, we're on a downtrend here, okay? Now, it could go one of two ways, actually, right? We can come all the way down here, retest this area, or we can actually get a retest on smaller time frames. And then the market could come back up here and reject this area. But once again, this is just from the monthly time frame. So my next time frame I'll actually go to is the daily. But then I actually want to point out this strong indication here. Okay, so we got our bearish engulfing candle here. All right, so this is the reason why I put this key level here is because the market actually played as resistance here, resistance, 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 support actually here, but it broke above, right? But it still played as support. Okay. And we have our support here, then we have the break here, then we have tested here, so it retested here, tested, tested, tested. If we go down, actually zoom in, we can see where the market continued down, continue to make a lower low, right? Gave us a lower high, gave us a bearish engulfing candle. This candle here actually retested this candle. And as we can see here, of course, it's August 31st. So this is the last day of the month. Of course, the market is actually closed because it's a Saturday. So I'll be waiting for the new candlestick to actually form. Now I'm going to go down to the daily time frame. So just based off that bearish engulfing on the monthly time frame, I already expect on the daily time frame to see lower lows and lower highs. Okay. And that's what we have, lower lows and lower highs. Okay. So before the market actually transitioned over to give us our bearish movement, we see here we have our bearish engulfing candle. Okay. And then the market gave us a lower low, lower high, lower low, our higher low. Okay. Gave us our higher low here. And then as you can see, moving down below, we have a continuation of our lower points. So what I'm going to do is actually just draw this out for you. Here. Here. Yeah, this here. All right. And this is currently our lowest point of the market. Oh, my apologies. Let me remove that. All right. So this is our main focus so far. So just based off looking at the daily time frame, overall, the market is, of course, creating those lower highs and lower lows. We have our low here, our lower high here as well. Now the market came down to this area, right? Because that's the last day of the week. Okay, so this was the Friday candle. Now, what my expectations would be for this pair is that I do expect for it to make some sort of upward, some sort of bullish movement. However, I don't expect for it to close and break above this previous area. Actually, I see two possibilities, okay? So I'm seeing this here, and then I also see this as well, okay? And actually, let me make this a different color because so just to recap, right? I'm going to go back on the monthly, but actually I'm going to stay on the daily time frame. Okay. So up here, we had our level of resistance from that monthly time frame. So this is the monthly key level. Actually, let me go ahead and mark this up for you. So this will be, just gonna put M. And then here I'll put, since this is on the daily time frame, I'll put And then here, I will also put it here as well. Okay, so these are my key levels, and I can identify them by looking at the abbreviation. So M for monthly, D for daily. Okay, and this box that I have highlighted here is that whole bearish engulfing pattern. Okay, so here is where I'm sorry. Here is actually where the market started to transition. Now it's all about structure. Market structure plays an important role to trading. Okay, so I'm just going to zoom in. We're going to start from this area here. I sort of like skip around because it'll be repetitive, but you'll get the idea. Okay, now looking over here, we see that overall the market was not able to break past this area. Actually, this is what I'll do. The market wasn't able to break past this area. Okay, this will be what we like to call our resistance. All right, so the market wasn't able to break past this area, and I'm just going to drag this trend line along the way, so this way I won't have to keep adding all those lines to the chart. So the market wasn't able to break past this level. All right, and then here we get our doji candles. So some people say doji, some people say indecisive candles, etc., etc. Some people say pins, candlesticks, whatever. All right, just to sum everything up, the market was not able to break past this resistance level. So moving forward, the market then created support area. Right, so this is our level of support where the market wasn't able to break past this level of support over these days here. So this is actually 1, 2, 3, 4, 5. These is actually 5 candlesticks, which indicates that it took a week for the market to actually make its this transition. Right, now the following candlestick actually closed below this daily support, and then it continued to create its lower high. I'm sorry, not its lower high, but its lower low. Right, now if you guys are into market patterns, if you look here, I'm actually going to add my line behind my candlesticks. If you look here, this is actually a right here. Here is a double bottom. Okay, but due to the fact that this right leg was not able to break past this leg, it continued to go down. Now, for people who are not trading with the trend, due to the fact that the overall trend, of course, is bearish, you could have gotten to this trade. That's fine. But if you're trading with the trend, overall, you'll probably wait for this to play out before you continue taking your sells. Or if you're a swing trader, overall, you'll still be looking for buys. And this is probably the area where you would be looking to add another position to your trades. So this will be what people saw, right? So this is why market structure plays an important role, because if none of this happened all the way to the right-hand side, and I'm sorry, I know I made that line a little longer, but if none of this happened to the right-hand side and you don't understand structure, you would definitely got caught up in this trade. Because this does look like a double bottom, but then look at the top, structure has not been broken. Okay, so the market created a low here. My apologies, let me move that. Let's highlight it. So the market continued on the downtrend, right? And then this next two candlesticks created the first leg of the W, came up here, created that level of resistance. Couldn't break above this resistance area because now this would be considered new area of resistance. So this area here cannot break above this lower high. So this area will be considered a lower high as well. Okay, came back down, gave us the second leg of the W or double bottom. Shot back up, but still wasn't able to break above this area. Okay. It tested the area, but it didn't break above it. And then the market continued to go down. So that lets me know that the market is still continuing its downtrend. Okay. So all I'm expecting is a continuation of bearish movements until structure has been broken. Structure has been broken, I will continue to expect sales just based off my higher time frames. So now what I'll do, instead of going through each lower high, lower low, lower high, lower low, I'm just going to just transition over to this current closing candlestick. And as you look here, you can continue to see like the major market patterns. So you have your lower low, lower high, lower low, first leg of your double top or your M. You have the neckline, second leg, and then you have that break here, that retest candle, and then the continuation gave us a double bottom, but is not able to break above this area here. So it's not able to break above this lower high for me to even consider this pair to be bullish, an overall bullish variation or continuation after the retest has been completed. Okay. And now that we're over here in this area, after the market has continued to make lower highs, lower lows, lower highs, lower lows, you can see within your candlesticks that you do have your major market patterns. So I like to only trade them when they're in line with the trend and not really when they're just retracing. Okay. Now, coming back over here, this is where I'll actually dive into this area, because now this is my main focus. I'm just giving you information and details in regards to how the market was moving to get up to this area. So we have our daily key level here, and the market could possibly come back and actually retest this area and continue to go down, or the market can close above this area, this key level, retest it, and possibly come here to this key level. So the market likes to always go back to those key levels, those supply and demand zones. So our next level to look at, time frame to look at, would be our 4-hour time frame. Now looking at the closing of this candle, here we have our doji, pin, exhaustion candle, however you would like to call it. This candlestick lets me know that on smaller time frames, we do have a transition within the smaller time frames. But before doing that, as I mentioned to you earlier, just by looking at my higher time frame, which would have been the daily time frame, I do expect, and this is just a price projection, so this isn't set in stone. So when the market does open up and goes in a different direction, don't say, hey, you said it was going to go this way. Once again, this is all based on projection. The market does repeat itself, so usually everything is like repetitive. So if it doesn't come back up here on this time frame, then what's going to happen is that the market will then go to an area that previously had some sort of rejection at a key level, which would have been a combination of both support and resistance. Okay, so this, I'm actually going to draw it out on this time frame. Of what could possibly happen on this particular time frame. Okay, so we know that, you know, the market just doesn't go all the way up here like that. Okay, like the market moves and pushes. Okay, so this is going to give you like a couple of variations that can possibly occur when the market does open. Due to the fact that I see a lot of price projection in this area, I'm just going to move this to the back. Due to the fact that I see a lot of price rejection in this area, I do expect for price to actually push back into this area and then continue to go down. Okay, or the market can probably find a new level of resistance here. Which will be here, right? So this area is for the daily, and this will be for my 4-hour. Because we have support, resistance, resistance, resistance. So the market can give me something like this. You know, maybe on smaller time frames, it'll probably create like a double bottom, triple bottom, or it could give me like a inverted head and shoulder pattern. You know, so it can give me something like this, come up here, play up around, you know, consolidate, come down, retest it, and then, you know, continue its wave formation. Or the market can do something like such. Come up here. Retest. Okay, so it could close here, come back up to retest this line again, come down, or it can actually, you know, probably consolidate here, right? Retest that bottom line, continue down. Like there's so many ways that this can happen, okay? But this area here, and then also this area here is where I expect price to reject those areas, right? Because I'm seeing exhaustion already on the smaller time frames, just based off that candlestick. And then if I drop down to the 1 hour time frame, see the market already started to pull back. Now this could be a possible new lower, higher low actually. So this could be the first higher low since this downward movement. So I'm just actually going to highlight this, right? So this would be our first low there. That could be our first higher low. Okay. And then once this has completed, I do expect price to come in this area. So it's just taking advantage of those higher time frames, because those higher time frames are very important. This is how you're able to determine if you're catching a counter trend or if you're trading in line with the trend. Okay. Now, with that being said, you can mark this up. Today is August 31st. The market has not opened yet. Okay. Yesterday was Friday. When the market does open up on Sunday, you can track down this pair and let me know if it plays out for you. Like, let me know if price does respect this area. If it does, send me an email. If it doesn't, just comment. Or you could comment if it does play out. But once again, this is just taking that higher time frame and breaking it down to the smaller time frame. So with that being said, this will be the ending of this video. I will actually add more videos to this channel. All of it will be based off analysis, top-down analysis, top-down analysis. I will definitely go over structure, because if you look at what I've done, I always include market structure within my videos. Market structure, market structure, market structure. Okay, market structure is very, very, very important. And the reason why I'm saying okay, Constance, is because I want to be able to make sure that you understand what is going on, instead of just coming to the chart and being impatient, not having your analysis on point, just thinking that, you know, you can throw lot sizes all over the place. You have to be patient, because if you're not patient, the market will eat up your account. Remember, these are institutions that are not afraid to take your trading account and turn it upside down. Okay, they are the ones to literally move this market. We're just here to get a piece of it, because of course money is always being printed. Right now, money is being printed. Yeah, I'm pretty sure everyone wants a lot of money for whatever reasons, depending on their lifestyle. But overall, patient pays. Patience, 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 market structure, market structure, market structure. So definitely, if you enjoyed the video, like, subscribe, comment, and welcome to the channel. Also, be aware that I will constantly drop videos, so definitely turn on your notifications so you can be the first to have my videos. Thank you, and enjoy the rest of your day. Take care.